Good morning, folks, and welcome to this morning's video. I hope you had a great weekend, and I have two pairs on watch today, and those are Euro Kiwi and Aussie Kiwi. So my favourite of the bunch is Euro Kiwi, just looking for a potential shorter term move on this one. So on the higher time frames, you can see that we are at a standout area of value for a high, for a sell rather. Okay, this is the kind of area where I would anticipate a break above, people being caught the wrong side of the market, and then a move to the downside. You might be thinking, there's a lot of momentum there. Well, yes, that's true. And one of the things I'm factoring in as well is that there's also a lot of volume been built up in here as well. Okay, so this may be, with all things considered, a shorter term move to the downside because of the amount of volume that's been built up there. Because if we measure this on the break, okay, and we assume that the leg out is of a similar length, okay, and often if we times that by 2, so we'd end up about there, up towards this sort of wick. So this may be, try that again, this may be an impulse correction continuation to push higher longer term to give us kind of that structure, but there may be on the lower time frames a way that we can capitalize on a move to the downside in the meantime. As I often say, one of the reasons why we might be going longer term is because if you look at this, we've retraced. Actually, let's get the right tool, shall we? Let's get the Fibonacci tool. If we look at that, we've retraced about 70% of that move. Okay, so we could be seeing a move to the upside longer term. But if we just zoom in, okay, so we've got all of this. We do have as well this expansion into that area, okay? And you can see that I'm not so concerned about that. It's just a point of note. If we just zoom in, okay, you can see what's happening here. So looking at what's happening at the minute, if we were going to go long, it is looking at this moment in time. If we just zoom into the 1 hour, it is looking that we would likely create something, we would likely break above to give us this kind of structure, okay, the 1, 2, 3, push to the downside to take out this low, which this low near miss 2, which just so happens to more or less be the retest at the back end of that. It's likely that we would find our way down to that area, perhaps retest the back end of that, but break below this sharp move, break back in, and then we would get some kind of flag like that for that move to the upside to complete perhaps that higher time frame direction that I was talking about. So that means that potentially we could capitalize on a move to the downside in the meantime. Okay, and one of the clues for me is also that we have this. So not only do we have the near miss there, we also have this move, this impulse correction continuation, which if we measured it, so I'm measuring from the bottom of the impulse to the top of the correction, and we took it to there, that would actually line up as well mathematically. If we just use wait a minute, what's going on here? Right, if we use that would actually line up mathematically as well. Okay, so what I'm looking for today, with all of that in mind, this looks like it might just be a little bit of a FOMO move, okay, where people get in the sells too early, that are perhaps too zoomed in and don't realize there's a massive higher time frame high set above. But what I'm going to be looking for is I'm looking for a break above, specifically a break above, because we're at a higher time frame liquidity point, and the majority of the time we would need to break above for a move to the downside to occur. Okay, so I'm looking specifically for a break above, then a break back below the area of interest, and then what I would do in this instance, I would measure from the range, so the higher time frame liquidity point, I'd measure down to there, the base of this structure, okay, and the 90% area is there, but we have a sharp move sat just above it. So when we have, ordinarily, I would set a take profit at the 90% area and trail my stop loss accordingly, but when we have a very sharp move sat just above it, okay, I will actually set the take profit there, okay, for something in the region of 5%, depending on what kind of structure we get, okay. And if the 5% is my minimum requirement, if for whatever reason, let's say we had to have a wider stop loss, I would actually set the take profit down there, okay, and then trail my stop loss, because the minimum where I use the take profit is 5%, and I would trail my stop loss at the same time. And of course, then we could potentially be flipping our bias in this area, looking for longs if this actually plays ball for the reasons previously given. Okay, so that is Euro Kiwi. I have an alert set just below the higher time frame area of value. I'm not interested in doing what many people will be doing right now, which is selling here. This is exactly where people get tagged in and tagged out multiple times. Okay, people would have sold here, but we do have the near miss to there. But if you zoom out, you can see that there's a higher time frame liquidity point sat just above. Okay, people would start selling here, they get washed out. I wouldn't even be surprised if the same thing happens again. You get something like that, then you get that reversal structure, then it breaks above because people think it's going to the moon, then breaks back in. I wouldn't be surprised if something like that happens, because it's just the same psychology over and over again. And the number of people that have said to me, yeah, but how do you know psychological patterns will always repeat themselves? It's like, well, because people repeat themselves and the patterns are just a reflection of that human behavior. So it's like saying, well, it's like saying, how do you know that greed, love, hate, and all these kind of things, how do you know they'll always exist? Well, unless you start genetically modifying people, then of course they're going to exist. So it doesn't even make sense, that argument. But if people don't understand psychology or its importance in the market, and they don't understand that you can actually spot such behavior just from the patterns, then they wouldn't understand why patterns would repeat themselves. Okay, by definition, a pattern is something that repeats itself. So, but that's another argument for another day. But anyway, on the higher time frames, Aussie Kiwi, we have now this kind of adds weight to the euro, excuse me, to the Euro Kiwi idea to some extent. So we have this move down here, okay, and look how much of that move we've actually pulled back. If we just measure that, we've pulled back a similar sort of deal, about 70%. Again, what we've got here, looking at this now looks to me like let's try that again. This to me looks like a potential M-style pattern where we have so much volume building up, okay, after the move down, that in the end this just becomes neutral and it breaks to the upside, potentially to test that high again, okay? So on this one, I'm not looking for shorts because the structure is not showing that at this moment in time. So we have all of this volume that's accumulated, okay? If we just zoom out as well to the weekly, one of the reasons I put this on watch, as you can see here from last week's close, we have the move down, all of this volume, we break to the upside, and then we come back down and retest we retest that low and that low. Did we retest that one as well? Not that one, but we retested that low, a sharp move, a very sharp move there, and then we move to the upside, suggesting to me that this is an impulse correction continuation to push higher. Okay, and if we just zoom in a second, if we look at where the impulsive momentum started, we measure that to there. So impulse correction continuation. If the leg out of the correction is of a similar length, look where that takes us. That takes us up to there. So that mathematically makes sense as well. Okay, if we just zoom into this structure, you can see here, this is actually a bit clearer on the 1 hour chart, but we have the base of this structure. Price comes all the way down, taps it, but doesn't break below. Okay, meaning that there's likely still liquidity there, particularly if we're going to come back down to retest all of those higher time frame highs that I was talking about. And then we get the middle section, we get the more corrective move up, what I call the FOMO channel. Not so much a FOMO in this instance because technically we did actually tap that low, so people might have had their reasons for getting long. But we move up correctively, suggesting that while people are trying to buy this, the orders that are down here and being placed in this area are dragging price back down, which is why it's moving like this. We then move to the downside. We break below these lows by way of this parallel reversal structure, and then we move to the upside aggressively. Okay, and if you look at what's happening now it looks like we have an impulse correction continuation to push higher. We have this first little bit of structure there. We break out of that, price comes down, leaves a footprint, which just so happens to be the retest at the back end of that. So in many respects, I actually prefer this to Euro Kiwi. It's just the positioning on Euro Kiwi, which I think is better. What do we have here, folks? Look what we have. This is what I actually forecasted last night. What time was that low created? Yeah, so I did my forecast before this low was actually created, but I already predicted this just because this looked like it lacked depth. So I was predicting a near miss to the low, some kind of corrective middle section like that, and then a push down to give us that, which is almost identical to what we just saw on the larger degree there. Okay, so with all of that in mind, what I'll be looking for from this pair today is the following. I'm looking for a tap into here. If area of value tapped into by way of a 3-touch structural approach, risk entry after a 15-minute rejection from it. So that's what I'll be looking for. If it's a 1-hour structure, if I can see the structure on the 1-hour chart, that gives me permission to drop to the 15-minute chart to look for an entry, and then I would look for a rejection there. And if we got that, then we would have tapped into this low near miss too. So we have the first low. Okay, this is what's taught in Falcon mechanics. So we have a low which takes out this low but leaves a gap to that low, and then usually what happens is that we come down to take out this low near miss 2, which gives us that structure. And one of the things that makes that more likely is the fact that we have the retest at the back end of that, which is just an additional confluence factor. And then I would look to get long, and then I'll be able to manage this up to this high for something in the region of 2%. We then have the high of this structure, okay, which give us something in the region of 3.5–4%. Okay, and where my target would be in this instance. So you have to remember, although I said it looks like we're moving to the upside to take out that higher time frame high, you have to remember that price will need to build volume along the way. Okay, so where would it likely need to build volume? Well, after this move, it would probably likely need to build volume. So if we measured that, okay, so we're looking for the impulse correction continuation to push higher. And when we have a correction which forms after such a big move, we have a correction which forms, this close to this high, it's likely that we'll just blast straight through that. So where does that put us? Well, if we zoom out, okay, I'm just looking for, if we just zoom out, we have this running channel here. Okay, we have this structure here. And the base of all that was there. Okay, which just so happened to be the retest of the back end of that as well. Okay, so that would likely be where we would stall, even if we do move to the upside to take out that higher time frame target that I was talking about up there. Because mathematically, if we just zoom back in, yeah, mathematically that lines up with that. Okay, so that impulse correction continuation. So that's where I'd set my take profit. I would measure from the range. So the range would be from here. I would set the take profit there at the 90% area, which would give us something in the region of, because that's where price often pulls back deeply, even if it is going to continue in the forecasted direction. That would give us something in the region of 7.5% to work with. Aussie Kiwi is one of these pairs which we have to manage quite loosely because it chops around. It's very corrective. You need to give it a bit more room to breathe. But that is Aussie Aussie Kiwi, and that's what I'm going to be looking for, folks. You can see now, if you look at how prices moved away here, it moved up aggressively, but then we've just been consolidating, and this consolidation looks very wide relative to this one candle which preceded it, adding weight to the theory that what we might do is move to the upside to give that kind of structure, which just happens to tap into there. Okay, and then we have that 1, 2, 3. Then we come back down, and then this becomes the middle section, okay, which gives us that 1, 2, 3, which taps into that low, which is the retest of the back end of that. So I've got my alert set. I've got my alert set just down here to see if we come back down, and if we don't, then I'm not going to look at this pair at all for a possible entry. Okay, because my requirements won't have been met. So that is what I'm going to be looking for today, folks. I hope you've enjoyed this video. It's a slightly shorter one, but hopefully you learned a lot about the thought process that goes on whilst I'm putting these pairs on watch. But for now, have a great day, folks, and I will speak to you again soon. Thanks very much for watching.